what we should be looking for. Do you think that Powell is going to signal rate cuts? Do you think that there is evidence to suggest that he should or shouldn't? What are your thoughts? What do you think he's going to do?
Yeah, I think for the past few, let's say few events that we already received, they were very cool, not really on the positive side, which is actually good for the rate cuts. So I'm expecting some positive news from him. And if maybe we had the last speech, I think it was May or March, he said we are going to expect maybe 2 rate cuts. I think maybe he might continue like that. But at the moment, tariffs left and right, and the stock market is now actually this week never actually even tried to push the upside, which is actually good. A few NFPs here and there, CPI was also not really that aggressively positive, which is also good. So I think it's a good time to signal some rate cuts.
If he's going to do it, right, it would be today. Like, because we do not hear again from Powell this month, the next time we're going to have kind of that big decision is the Fed day. So if the Fed is going to cut in September, I think this is what makes today a potentially very volatile event. If there is expected to be rate cuts in September, we should probably hear from Powell today that there, is some room to be dovish. The Fed has been for the most part, to their credit, been very transparent about what their plans are for the most part. If they see, rate cuts or rate hikes or rate holds, they've signaled that pretty consistently. In fact, for the last, multiple years, I don't think we've had any very big surprising hikes, cuts, or holds. Like almost always the market knows what it's going to do, what the Fed is going to do before they do it. So that would tell me that if this is the precursor to the next big Fed meeting, that we should hear one way or the other from Powell. He's likely going to give us something where they're feeling like inflation is too big of a problem and they're not going to cut rates in September, or that they don't necessarily have a decision made. I think what he'll always say, we don't necessarily have a decision made on September, but the bigger question would be, does he signal like our bigger risk right now is inflation? If he says that there are bigger risk to the mandate right now between jobs data and inflation, if he leans heavy on inflation is the bigger problem right now, the market could say, okay, well, inflation's on the rise, so they're thinking they might not cut rates in September. So it's really a tricky and really important event today.
Yeah, I think, but if you checked, remember, we are now on the second half, and now we just left with few months before year end. So which means one way or another, he might signal maybe 1 rate cut or something like that. As before, he said we're going to have 2 rate cuts. Even though he might not really be that specific. Remember, Trump tried to push him to cut the rate. So maybe he's not going to fall for that. Seems to be like submitting to Trump, but at the same time, investors want to know if maybe there is a possibility of rate cuts, which I think is quite possible. And if we check maybe 3 months of economic events, I think they were agreeing. I think those events, they were all cooling off, which is a good thing. And yeah, I think we've been on a little bit higher rates, obviously, one way or another. The thing, I think maybe the only thing that I think is still very playing around that we're still not really sure about, it's tariffs. And they make prices to go up. Obviously, inflation will slowly go up. So that is something that we don't really want. And it's already happening, unfortunately. I think that is something that will delay rate cuts. But one way or another, maybe they might try. Maybe one, that will be much better. But at the moment, I feel like they have a green light. Maybe once, I think it's going to be much better.
Yeah, it's really going to be interesting because, as you mentioned earlier this year, they signaled for, I believe, 2 cuts that was in the dot plot earlier this year. So the question becomes, if you're going to cut twice, if you're going to stick to that plan.
Market analysis, free trading courses, Edge Finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
This is it. Anybody else get really sweaty just now? I'm just kidding. Just a word to the wise. I've done this for a long time. If you are like heavily positioned going into an event like this, you should never be heavily positioned. It is just, that's how they get you. You know, the markets are a dangerous place if you have huge trades on. So please be careful. You could get some big volatility today. You could also get some fake outs in both directions. Whatever your thoughts are, be humble enough to recognize you could be wrong. And personally, I'm going into this event. I have trades on. I've several long positions on stocks. I have a couple currency pair trades, but I'm very low. I have very low risk on going into this event. I have a lot of cash sitting on the sidelines. I would love to see a dip in the markets. If the market keeps going, though, I've got covered calls and a lot of stocks I own. So we'll see. We've got gold making some kind of move here. Fed's Harker, magnitude of a rate cut is less important than the signal. Interesting. With policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance. Yeah, look at gold here, guys. Gold is ripping here. There we go.
Down.
All right, there you have it. I took several notes, and I'm definitely interested in discussing, sharing everything that we just got to see. Just a quick high-level view. Indices made a jump higher, up 1% for the S&P 500. Time of recording, S&P or the Russell up 2.5%. Gold made a push, up about 0.7%. Silver is moving even cleaner. Actually, this looks really good. Nope, I think I'm good. Yep, so oil prices moved a little bit. Look at Ethereum, man. Ethereum's up 8% off of that. Crazy move there. Dollar index, big push lower here. I felt like it was a little bit surprisingly more dovish than expected. Would you agree?
Yeah, definitely. I think I at least did not expect this sort of a speech from Powell. I thought he was going to continue with the wait and see mode, and he's going to signal inflation, because that's also something I've been seeing on Financial Juice. Fed officials commenting on inflation, and the meeting minutes also signaling inflation as an issue. But I guess the last NFP kind of changed their opinion possibly, and Powell now has a pretty different stance than most of the other Fed meetings that he led before. So I think a cut is definitely going to happen in September, maybe even 2 cuts in 25.
Yeah, and to the point too about in terms of his tone, I guess. I noticed that he kind of reiterated a few times that he felt that policy is restrictive, has been restrictive. He specifically said modestly restrictive, which tells you that if he thinks that, okay, if labor data is starting to show some signs of cooling, and he also thinks that things are restrictive, which is something I've been talking about in a lot of my content. I've been talking about, you know, if you think the rate is restrictive, that means that you have room to come down if need be. But also restrictive means that should also help with inflation. So if he thinks they're modestly, restrictive, I think that would suggest that he thinks there may be a little bit of room, which was at least my expectation for this was, I thought it was going to be more of a hawkish cut, where I would categorize this personally more as just a cut. Like he's signaling a cut, Maybe not, 5 rate cuts the next year, but seemed like he signaled pretty clearly that there is room to bring the monetary policy rate down with the added risks. He also pointed out that the long run expectation for inflation seems in line, so they feel okay longer term about inflation, and that they've noticed some things in labor market. So I thought it was a little bit more dovish than expected, and you did get a pop on a lot of markets.
Yeah, absolutely. And I think the latest environment with the Fed was so hard to forecast. There was such a change of tone between meetings and as the data was coming in. So with this last one, I think Powell really changed his approach, changed his whole tone, where now he's more open to cuts, and you can see a definite reaction in the markets. I mean, it's quite a big push on the euro dollar, so the DXY going lower. I can quickly go through it. So euro dollar, nice big pop to the upside. The Nasdaq and the S&P having a very nice reaction. Gold also pushing higher, but not so much, kind of remaining in this flat range. But the DXY definitely also dropping lower. So I think this was kind of unexpected. I also found a poll that Brent Donnelly did, and it was a poll that was completed by 500 traders, and the results were that most traders believe Powell was going to be hawkish or neutral.
I saw that.
Very few people, very few people actually thought he was going to be more dovish. So this was a big surprise, and if you had a bet that he was going to be dovish, you could have made quite a lot of percentage. This is the poll. So basically, almost no one had a dovish response or a dovish forecast. That's why forecasting these things is so extremely hard, and it's much better to focus on the actual raw data than these speeches, which tend to be sometimes hawkish, sometimes dovish, sometimes it's a huge surprise. So we try to kind of connect all of the confluences and then build an overall bias. So that's what I would recommend to people, to not just focus on one speech, but actually assess all of the data and then make a decision.
Well said. Yeah, I definitely agree with you. I think it's really important, going into this, Powell pretty much said all of the things that we've been focused on heavily in our kind of fundamental analysis here recently. You have threats to the labor market. You also have stubborn inflation. But by the Fed's own accord, 4.5% compared to the 2.7% CPI is restrictive. So there is a little bit of room. And I think that is what we got kind of confirmation of, was that line of thinking is correct, that a cut this year still seems on the table. Actually, I was looking at the FedWatch tool, and we do have going out to December, right? So if we look at September, you've got a 91.5%. So cuts are back on the menu, it seems, for September. But then I went out to December, which is really the interesting thing to see. The end of this year, we actually have now probabilities for 2 cuts. So we have kind of confidently come from, we're currently sitting at 4.25 to 4.5%. So the probability of an unchanged interest rate by end of year is very low, less than 1%. The probability of 1 cut is actually low. The probability really leans 2 to even 3 cuts. So we're back on the, path to, okay, we have room to bring the interest rate down. And so, this number has jumped all over the place. We saw this number went from 99% to 80%. I saw it actually, I think it went lower than
70.
That. Yeah, it went to 70%.
Yesterday was 70 something. So
yeah,
pretty crazy.
So we went 99% to 70%, back to 92%. So probabilities jumping all over the place. There was, questions as to whether or not the Fed was going to cut. And to be fair, I also was like, hey, is he going to come out and swing on the hawkish side? So I think this was a pleasant surprise to markets to get confirmation that, okay, he's not uber, hawkish. He's not kind of going to take the extreme path and say, inflation is the only problem, which I think is the correct call. I mean, you have evidence of both sides showing struggle. And I like the way actually that he outlined what do they do in this circumstance? I don't know if you caught that, but he said, what is the Fed supposed to do? I thought that was a really important thing that he distinguished. And he basically said, we watch both, and we essentially adapt to whatever is the bigger problem. And with his acknowledgement that we are in a restrictive state, he also pointed out that there's room to kind of administer to both sides.
Yeah, from my research, if the Fed has to choose between saving employment or cutting inflation, they're going to focus on employment. So they're going to be more dovish than hawkish if they have to make the choice. That's at least from what I saw in my research. So that kind of follows with his speech today.
Yeah, because I think prices are so volatile. But one of the challenges to prices is that there's also external factors that would be thrown into that combination, like oil prices and supply constraints that can kind of just cause prices to temporarily move in extremities. But employment is a strong trend one way or the other. Like if employment data is really trending down, that's a hard trend to stop. And so with the Fed starting to pay attention to cooling jobs data, I think that's the right call. And I've been saying, I think you're on the same camp, like some cuts make sense. I don't think, Trump pounding the table and saying we need, 2% cuts right away. I think that's a little drastic, but the idea of getting some cuts makes a lot of sense.
Yeah, like gradual cuts. And I'm waiting for the tweet from Trump. Hopefully it's going to be positive. Hopefully he's happy with Powell for once. But basically, I know some traders even anticipated that Powell was going to have like a speech that is a slap in the face to Trump, just highlighting how inflation is rising and we need to remain in the wait-and-see approach, and signifying how it is important for the Fed to separate itself from the administration. And that would be an even bigger reaction to the markets, I think. But Powell now kind of following the story of the cuts, at least some gradual cuts, makes the markets more calm. Creates more certainty as well for the markets. So I do like the story, and for me as a trader, for my current positions, this is good as well. One thing I don't like is that we did not get a pullback on the Nasdaq, at least not for now. So I was looking at these areas and I was seeing us pull back, and I was finally starting to maybe anticipate a retrace of, let's say, 6 or 7% to get in on some buy setups, but that is not yet happening. So we will see what will happen with that.
Yeah, I was going to ask you, like, positioning wise, where you're at and what you're thinking. Just to touch on the Nasdaq, I'm in the same camp. I've got a lot of stocks that are obviously up today. I think if I check my account, I'm up 1.2%. So I'm just shy of what the market's doing, which is largely attributed to the fact that I have a bunch of cash sitting on the sidelines in covered call positions. So I've capped a little bit the upside, but still a good day on the account for me. I think, though, that I still remain in the camp of I like the idea of indices continuing to move higher on a bigger theme. But I think patience will pay out in the end. For those of us who are trying to wait for pullbacks in markets, I don't think it's the wrong call. It feels like the wrong call when the market's jumping. Oh, I should have already been buying this dip. But I don't know. I feel like it's recency bias is really dangerous. Market's been going up, so it's got to keep going up, right? That's the thought process right before you do get some normal, healthy pullbacks. And if you are kind of like drastically rushing to buy every single down day, the challenge becomes when a normal, healthy pullback comes, you're going to be like, this is a crash, right? So you're going to like panic yourself, as opposed to just patiently waiting. And, it's one Fed commentary. You could very well have, movements in the next few days that continue to pull back. And I still think that the bigger picture is bullish, but that you may get some intra-trend bearish moves. So I'm holding out for pullbacks. I don't think there's a need to chase or make big drastic decisions off of this Fed meeting. Gold and silver, I'm happy to see some movement there. Do you have a silver trade on?
Silver, nice. I don't have a silver trade on. I'm looking for buy setups on gold and silver since they are getting a bullish reading on the edge finders. So on gold, I would like to get a breakout of this level of resistance right here. But silver actually just broke out of this swing high that I was looking at. So I may look for buy setups. Probably not today. It's Friday. So on Monday, I'll probably do some research and see if I can get in on a nice buy setup. I would also like for this daily candle to close above this level. So print a nice clean close and close above this swing high. I don't need to wait for a break of, let's say, this high level. So I'm happy to look for setups right now. I would just like for the daily candle to confirm the breakout and close with a nice clean close. And as far as the Nasdaq goes, I mean, as you mentioned, this is just one speech from Powell. We need to look at the all of the data points, let's say, and I do believe the retail is heavily long, while the institutions have been gradually selling, if I'm not mistaken. And also the euphoria is here. Everyone is buying stocks. Everyone thinks they're going to go higher. So this is, in my opinion, a very dangerous time to buy at the highs. But buying at a pullback, at a discount, I think could be very high probability. So I'm still in the same camp as you. I'm waiting for a pullback. I'm not going to just jump in blindly because Powell was kind of dovish. I will still wait for a better pullback. And also we need to see some more data points. We have NFP in September. We have CPI, PPI. So let's see what those 3 data points will tell us. And then we can start to assemble the puzzle. Is the jobs market really deteriorating? Is the inflation going up? We'll get more clarity then. So yeah.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.